So what's the next possible trap for investors out there? Whenever I hear people talking about some investment that's done really, really well, I wonder if that's the next thing to run into trouble. Somebody came in the other day, they were talking about a guy that they knew that was investing in rental properties, had a property behind their house, and it was constantly rented, doing really, really well. Well, it reminded me of, being in this business almost 30 years, people walking in and saying, hey, these tech stocks are really, really doing well. I want to get involved in that. Or the dogs of the Dow stocks, or penny stocks, or defense companies, or small companies, large companies. All of these areas have their time in the sun where they do really, really well. And of course, that time runs out eventually. You just never know when it's going to happen. Real estate is just an asset category, just like anything else. Well, people say, well, this investment's different though. Rental real estate, you get this income, and the income comes in regardless of the value of the underlying property. Well, I thought about that, and I thought, well, that's an awful lot like these high yield stocks or junk bonds. The interest payments come in regardless of the value of the underlying bond. It works until it doesn't. Now, if we look at real estate, it kind of has an up and down history just like anything else. It's an asset class just like anything else. In 1989-90, this is a month-by-month look at returns in the real estate market as measured by the Dow Real Estate Investment Trust Index. And you see a lot of red on that chart. Big negative numbers. And then of course 1998, 1999, it was a really rough patch for real estate. And most recent period in time, 2007, 2008, that we all remember. Very difficult period in time for real estate. Well, what are some of the risks in real estate? I'm just going to give you a partial risk of a few things to think about. Number one, interest rate increases. We have very, very low interest rates right now. When they rise, it can affect negatively real estate prices. Another thing is local and federal tax law changes. When the taxes change, so can the demand for real estate. Well, the neighborhood can go down. All of a sudden you have a neighborhood that used to be a great place to live and no longer that way anymore. A friend of mine was telling me about a place he works right now, and I said, yeah, it's interesting because that was a great area in town to live not that long ago. And he says, yeah, not so much anymore. And then of course you have businesses. They move out of town, they move out of an area, and then people that work at those companies move with them. So demand for rental real estate can go down with that as well. You can also have a situation where you own a piece of property and there's a lawsuit against you because somebody's hurt on that property. Then of course you have the usual things. Roof leaks, air conditioning goes out, pipe breaks, toilet won't shut off or whatever, carpeting stains. You have the pet that walks in and goes to the bathroom on the hardwood floor or whatever. These are actual real stories from when I've owned rental real estate. It's not for the faint of heart. And then of course you have the possibility that somebody, because real estate is hot, they build a property or they build more properties, and we're starting to see more construction, which puts more competition out there and drives down rents. And sometimes people just decide that it's a better idea to buy than rent. They're tired of throwing money away, and instead of renting your property, they go buy their own. Now, if we look at this chart right here, it shows us the return of large U.S., small U.S., large value, and small value stocks over the last 30 years versus real estate. Now, the blue line is real estate. And you notice something. It's the lower of the lines, number one, but also notice that there's every bit as much volatility in real estate as there has been in these other areas of the market. It's not without its risks. The other thing is this. With an investment portfolio, stock market portfolio, we have exposure to real estate. I own companies that own real estate. It was once famously said by Ray Kroc that he's not a hamburger joint, he's a real estate company. Matter of fact, this is what this particular chart says right here. It was interesting. I found this on the internet. Most people don't realize it, but McDonald's is not a burger flipping restaurant chain. It is one of the world's best real estate portfolios. Franchisees do the burger flipping, and McDonald's gets paid handsomely for owning the best commercial real estate all over the world. So I already have exposure to real estate when I own companies. And somebody might say, well, I need income though. And I would say, well, there are steps to taking income from an investment portfolio that are logical. Number one, you diversify. Don't put all your eggs in one basket, whether it be real estate, large companies, small companies, value companies, growth companies, international, or bonds, or whatever. Make sure you diversify across asset categories and make sure you're capturing market returns. Most people don't get market returns. They get much lower than market returns in their investment portfolios. Own assets that move in dissimilar fashion. Sometimes things zig when other things zag in your investment portfolio, and you want to take advantage of that and put your portfolio together accordingly. Make sure you own stocks and bonds and cash. Don't get involved in commodities and all of those things, gold and those types of things. They're not good investments. They're not investments at all based on the definition of investment. And you make sure you take your income from your better performing asset categories each year. Whatever has done best, you take your income from that, because I want to sell high, buy low. I want to take it off of that so that doesn't get overrepresented in my investment portfolio. And customize your investment portfolio and the way you take income for your situation. That's where planning comes in. So, investments, real estate, is it the panacea? No, not exactly. Lots of risks to consider. And we'll catch you next time.